Ladies and gentlemen, good day and welcome to the Q3 FY21 earnings conference call of Indoco Remedies Ltd, hosted by Nirmal Bang Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Manchanda from Nirmal Bang Institutional Equities. Thank you, and over to you.
Thank you, Rutuja. Hi, good afternoon, everyone, and welcome to the Q3 FY21 earnings call of Indoco Remedies Ltd. We thank the Indoco management for giving us an opportunity to host the call. Today, we have with us the senior management of the company, represented by Ms. Aditi Panandikar, Managing Director, Mr. Sandeep Bambolkar, Joint Managing Director, Mr. Mandar Borkar, Chief Financial Officer, and Mr. Vilas Nagre, President Corporate Affairs and M&A. Over to you, sir.
Good afternoon, all the participants. Hope you and your family members are all safe and healthy. Let me begin first with the business highlight. Net revenues for the quarter grew in double digits by 17.6% at rupees 333 crores against rupees 283 crore, and for the 9-month period ended December 20, revenues grew by 13% at rupees 923 crore against rupees 816 crores. EBITDA to net sales for the quarter is 18% at rupees 60 crore compared to 12.4% at rupees 35.10 crores. And for the 9-month period, the EBITDA is 18.3% at rupees 169 crore compared to 11% at rupees 90 crore. PAT to net sales for the quarter is 7.5% at rupees 25.1 crore compared to 3.3% at rupees 9.3 crore, and for the 9-month period, PAT is 7.3% at rupees 67.5 crore compared to 2.3% at rupees 18.9 crore. Now on to domestic formulation business. As per the AWACS December 20 data, IPM stands at rupees 39,484 crore with a growth of 6.4% during the quarter, and rupees 1,09,086 crore with a growth of 0.9% during the 9-month period. Indoco ranks 29th in the IPM with market share of 0.63%. The source for this information is AWACS. As per SMSRC, the number of drug prescriptions for the period November-December 20 for the IPM has degrown by 13% compared to the same period last year. Indoco ranks 24th with a prescription share of 0.74%. Revenue from domestic formulation business for the quarter degrew by 11.7% YOY. For the 9-month period, revenue degrew by 8.8% at rupees 480 crore as against rupees 526 crore. At the Pediatrics Conference and Awards 2020 organized by CIMS Medica India, the company's brand Kirodent received the Most Trusted Pediatric Toothpaste for Regular Use award. The virtual event was held on 21st November 2020 and was attended by key dignitaries from medical fraternity. During the quarter, 3 new products were launched, namely Fevindo 800 tablets, that is Favipiravir, Poviclean Gargle, Povidone Iodine, and Zimmune CD tablets with multivitamin. Onto the international business front, revenues from international business posted a robust growth of 72.6% for the third quarter. For the 9-month period, revenues grew by 66.4% at rupees 360 crore as against rupees 217 crore. Regulated markets grew by 86.3% YOY. For the 9-month period, the revenue grew by 87% at rupees 295 crore as against rupees 158 crore. Revenue from US business for the quarter are at 45 crore as against 16 crore, and for the 9-month period, the revenues are at 115 crore as against 30 crores. The company has dispatched the launch quantities of 1 ophthalmic and 2 injectables to US during the quarter. Indoco has also received US FDA approval for an injectable ANDA, and the launch quantity of the same will be shipped soon. Revenues from Europe business for the quarter grew by 45.1% at rupees 66 crores as against rupees 45 crores. For the 9-month period, the revenues grew by 38.7% at rupees 170 crore against rupees 122 crores. The company won major tenders in Germany, including AOK for allopurinol tablets worth rupees 140 crores. The revenue expected from this business is rupees 70 crore per annum. The company is vertically integrated for allopurinol API, the captive consumption of which will be equivalent to 100 metric tons per annum for supplies against these tenders. Revenue from South Africa, Australia, and New Zealand for the quarter is at rupees 6 crores as against 1 crore for the same quarter last year. For the 9-month period, revenues are at 10 crore against rupees 5 crore. Revenue from emerging markets for the quarter grew by 30.6% at rupees 27 crore against 20 crores. For the 9-month period, the revenues grew by 11.3% at rupees 66 crore against rupees 59 crore. During the quarter, revenues from API business grew by 55.3% YOY. For the 9-month period, the revenue grew by 12.6% at rupees 74 crore as against rupees 66 crore. Revenue from CRO and analytical services for the quarter was flat at rupees 3 crores. For the 9-month period, the revenues grew by 10% at rupees 8 crores as against rupees 7 crores. The Indian Patent Office granted 2 patents for Indoco's formulation manufacturing processes. First, a novel organogel composition for orobuccal drug. Indoco is currently using this novel process in the manufacturing of 2 of its brands, namely Rexidin M4 gel and Duostorm, a stable gel forming solution of timolol maleate. Indoco intends to use this formulation in its domestic and ROW markets. With grant of these patents, the company has 38 granted process patents, out of which 21 are of API manufacturing process and 17 are for formulation. That is all about the business highlights for the third quarter, and I now request the participants to put up their questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sudarshan from Sundaram Mutual Funds. Please go ahead.
Thank you for taking my questions and congrats on great set of numbers. Ma'am, my question is on the domestic business. While I think we have done very good on the export side, I mean, on the domestic side, we are a little disappointed because we were expecting that on a Q-on-Q there should be some kind of an improvement. If you can give some color with respect to, anti-infectives, gastro and ophthalmology, which has a higher, which occupies a higher percentage of your overall domestic side. And also if you can give some color with respect to the larger brands, because the products like Febrex, has not really kind of seen any kind of a growth. If one is looking at it from a Q-on-Q basis also, it's not as, kind of improvement as what we expected. Like Febrex, Oxipod has really not kind of, or even Cyclopam for that matter. So if you can give some color with respect to some of these, therapy areas, some of the larger brands, with respect to when we can see, somewhat more normalization and what kind of plans do we have to push sales, or is there any way where we can bring additional sales?
Yeah, right. So as you correctly identified, we two of our key brands, Fabrics Plus and Oxypod, have heavily degrown. Not just in this quarter, but even in the earlier quarters. I think you have two questions. One is why sequentially we could not show higher growth than Q2. And the second one was about the bigger categories, the products, how our other products are faring. So first, to answer your question, on a month-on-month basis, if you look at the trajectory of most of our therapy areas, you will see that we are doing better than the month before in lockdown. However, having said that, it is true that we have not been able to post growth over YOY in this period. And the two categories of products for our products which has let us down, one is anti-infectives and the second is respiratory. Both these therapies have not done for the covered market as well. For the third quarter this year, the respiratory category has degrown by 12% for industry. We have degrown by 3% here. Anti-infectives also, if you take out the impact of favipiravir and some of the antibiotics that have been used for COVID-related illness, other than that, anti-infectives are also heavily degrowing. And that is how Oxypod has got impacted. We are confident going forward as things open up, and essentially it is a use of masks which has caused a great amount of fall in any kind of respiratory and other ailment. Increased hygiene conditions, work from home, eating at home, all those have been responsible. So our acute categories have got impacted, and which is why the domestic business has shown the minus 11% this quarter. Some of our other categories and products you specifically asked, Cyclopam is one of the key products which had got impacted in lockdown but is showing good trends of recovery now. Same is the case with a product like Cital. The dental products are also doing quite well, and for the third quarter we have grown at twice the rate of the covered market in stomatologicals. So as such, there are good indications that we shall do well in domestic. However, we stay to a certain extent impacted by what is happening in the covered market and by the demand for these products. I hope that answers your question.
Yes, ma'am. And in terms of specifically this, therapies like ophthalmology, dental, I mean, because of the fear of COVID, I mean, are we seeing better traction and better footfalls?
There is improved traction and improved footfall. And incidentally, Ophthal is one of the category which is ramping up much faster than all the others now. So I expect Ophthal, dental, in fact some of the other subchronic spaces also to do quite well, like Gynac. These should pick up first. The acute therapies will lag behind a bit for a growth perspective.
And specifically with products like Fabrics and Oxypod, given that the last few months it has been much lower, is it primarily because of COVID, or is there any other issues with respect to these brands, ma'am?
No, there are no other issues. Primarily, the season for these products is Q2, which did not come in this year because of lockdown. So Q3 generally is lower than Q2 even under normal circumstances. This year, as I said, use of mask, better hygiene conditions. Generally, people have not got impacted by respiratory ailments. So most products in the respiratory segment, cough, cold, decongestants, and antibiotics used for upper respiratory tract infection, like most of the CIFA molecules, they have not done well. And Oxypod and Fabrics Plus fall in these categories.
Sure. Ma'am, one question on the cost is, if I look at it on a Q-on-Q basis, the other expenses is lower, so is your staff cost. The broad belief was that, the sales will kind of come off and the cost will kind of come off. It looked like either of them have not happened. So any view on the cost side, ma'am?
Yeah. Costs related to India business have gone up marginally, as was expected. The costs are not coming back, and therefore the top line is coming back is not a correct correlation to make. whatever needs to be done for India business by way of increase in travel and or advertising as is required, based on what we can do given how conditions are opening up, is being done. And we are confident, therefore, that the top line will come back when the conditions get corrected. Yeah?
Yeah. And with respect to the injectable products, we should see ramp up from the fourth quarter, right? I mean, for the US business.
Yes. Yes.
Okay. Sure, ma'am. That's it from my side. I'll join back the queue.
Thank you. The next question is from the line of Aditya Khemka from InCred Asset Management. Please go ahead. Mr. Khemka, may we request you to please proceed ahead with your question?
Yeah. Sorry. Thanks for the opportunity, and hi, Aditi ma'am. Hi, Sandeep sir, Vilas sir. So just first question is on the India business, Aditi ma'am, as you said. So if the represented market has also not done well, so in terms of market share, are we flat QOQ? Are we up? Are we down in the represented molecule market share?
We are marginally higher.
Okay, so we are gaining market share in the represented molecules.
Yes, most certainly.
And that stands for citalopram, that stands for Febrex, and that also stands for Oxipod.
Cyclopam, yeah, Cyclopam and Febrex Plus. Oxipod, we are in the top 6 brands of ceftazidime, and the market leader is doing better than the rest of us, marginally.
Understood. Fair enough. And on the litigation that we were engaged in for the India business, some products, we were sort of in litigation with the innovator regarding the IP. Could you update us what is happening there?
It has not really moved. There were a couple of hearings where nothing happened, and status quo continues. A new date has been given. We stay hopeful.
Right. Does the delay in solving the litigation also limit our opportunity window, or does it not impact that?
No, it will not limit our opportunity window. There are other molecules expected to come off patent in this category a little later. But the biggest factor here is the innovator product and how good it is from safety, efficacy perspective, and that market will stay.
Understood. Now to the US business sales, which has done exceedingly well. So does this include milestones from the product approvals and launches that we have done?
Yes. As discussed in the last call also, Aditya, typically the amount of proportion coming from milestones and total sales is almost constant for all the 3 quarters.
As in it's 50-50 almost? Or
No. It's much lower. I think how much is US this quarter?
Out of overall total export sales, if you want to understand in terms of dossier and all, it's hardly 18 crore, which is like a profit share.
For the quarter, only 18 crore comes from milestones, which we also call dossier income internally.
Right. Okay, understood. And just one last question on the cost structure. So given that the costs are marginally lower sequentially, but the India cost has normalized. So is it the freight cost on the export side that is coming down, or what cost is coming down?
India business, all costs have not come back, Aditya. And like I expressed earlier, many areas of the India business, we are actually looking at bringing in more efficiency. So some costs are likely to get postponed forever. Let's hope that. Regarding on international front, it is more a game of numbers. Sandeep?
Yeah. It's more since the volumes have gone up, the plant costs have got optimized. Freight is, I think, constant.
Oh, in fact, it is little up.
Yeah, freight is constant or marginally up, so we are not getting any advantage of that.
Coming to cost of goods, if you look at a YOY picture, the absolute amount of milestones collected in Q3 this year would be higher than same quarter last year, and that would impact the cost of goods.
Understood. So that impacts the cost of goods favorably.
Yeah.
Right. And also on your production, so now we have a lot of API capacity given the Patalganga expansion. So what percentage of our products are we vertically integrated? I am focused on the export side. Domestic, I don't really care that much. But on the export side, what percentage of our production is actually
Close
vertically
to
integrated?
80%.
80. Okay.
Yeah.
Okay, ma'am. All the best. Thank you.
Thank you.
Thank you. The next question is from the line of Charulata Gaidani from Dalal and Broacha. Please go ahead.
Yeah, congrats on the good set of numbers. And my question, does Europe sales include allopurinol?
Yes.
Okay. And in terms of US supplies, could you name the injectables that we have supplied?
Actually, we cannot at this stage. But we have been making periodic press releases whenever we got approvals, at least when it is our own product. Yeah?
Okay.
Yeah.
So the two injectables are your own or for contract?
Some are contract, some are our own.
Okay. And there is one injectable that has been approved that will be shipped in the current quarter?
Yes.
Okay, that is your own or?
Customers.
Okay. And in terms of lower interest and depreciation, have you repaid some debt?
Yes.
Yeah.
Okay.
You will be happy to note that between December 18 and December 20, we have repaid almost 50 crore long-term debt.
Okay. So how much is the gross debt?
Short-term debt, of course, fluctuates between 120 and 140 crore.
Okay. What is the current level of gross debt?
Gross debt is around 285 crore.
Okay. And cash?
Cash,
So 2.5, 3 crore kind of thing. Cash balances, no, you're talking about. It's marginal. Short-term rates are also coming down. If you notice, that's also short-term debt rates are also sequentially coming down every quarter since last 3 quarters. So that has also contributed
to the lower cost of finance.
Yeah, right. Yeah, okay. Thank you.
Thank you. The next question is from the line of Deepan Narayan from Trustline PMS. Please go ahead.
Thanks a lot for the opportunity and congrats for good set of numbers. Aditi ma'am, as you explained, this domestic formulation, so when are we expecting recovery? So basically on anti-infectives and also other segments, acute division.
Yeah, so we keep our fingers crossed. As such, now that vaccines have come in, I guess it will give people more confidence to step out of their homes and more normalcy is likely to return. With that, I am hoping acute segments will gradually come back. As such, as I already said, in the first 2 quarters, we were taking a lot of flack from most of our key products. But in Q3, we have seen a good recovery of cyclopam, and in Q4, I expect it to further get better. Now we are just lagging behind just for 2 products. One is Febrex Plus, which is typically used for blocked noses, for congestion, pollution-related, allergy-related, and when the season changes. And for Oxipod, which is a cefpodoxime antibiotic used for upper respiratory tract infection. So both of these have a seasonal element to it also. Typically, Q2 is season for these products. So for kind of peak sales of these products, I guess we would have to wait for second quarter of next year. But otherwise, QOQ kind of numbers we should be able to, I'm sure by first quarter next year we should be able to do better.
Okay. Also, can you provide some guidance in terms of next year, how it will be looking for domestic, US and European market for us?
See, India business YTD is -9% right now. And considering whatever we have seen of the last couple of months, I don't expect it to change too much for the whole year basis. So this year, we can safely say India business will be down by 8 to 9%. And from there, we must expect a minimum 15% growth next year.
Next year, okay. And what about US and European market?
US this year will do close to 150 crore, and we should do 220 to 25 next year, about.
Okay.
Europe will grow at around 25 to 30%.
Yeah.
Okay. Europe, earlier we have guided for some 225 crore for FY21. Now with this increased order, it will increase further, right?
No, it is factored in.
I think we factored in when we said 225 this year.
Yeah.
Oh,
So you can take a 25 to 30% growth on that,
yeah.
can be expected.
Okay, sure, ma'am. Thank you and all the best.
Thank you. The next question is from the line of Rashmi from InCred Research. Please go ahead.
Yeah, thanks for the opportunity. So little bit more clarification on the domestic side. Are we seeing any competition or any market share loss in the stomatological therapy? Or we are still the most prescribed brands in this therapy?
Most prescribed. No loss of market share.
Okay. And ma'am, on the cost front, you said that the cost would be expected to get postponed further. So is it safe to assume that Q4 also we will see the similar kind of other expenses and all, just like Q3? I mean, it would be in that range only. But what about FY22? Is it something that then all the marketing and promotional expenses and everything will come back, everything will get normalized, and this is going to go up like FY20?
Not entirely like before, but yes, it will inch up.
So inch up in the sense, now currently I think more or less we are in the range of 26% of sales. So fair to assume that at least 100 to 200 basis point inch up can happen in the next year?
Yes.
Okay. And ma'am, on this allopurinol tender, this allopurinol for Germany, it would be supplied from which facility?
Goa plant 1 and 3.
Goa plant 1 and 3. So what I understand that from plant 3 we were already supplying it to the US, right? And I think
same site. We are also making for Europe. We are also making from one of the Baddi sites.
From one of the Baddi site. So it would be supplied from 1, 3 and Baddi plant, the new Baddi plant, right?
Yes.
Okay, so what I want to understand that in the US, allopurinol used to contribute around $1 million, right? So it is at the same level, or the supplies to US have come down and now we are focusing more on supplies to Germany? I mean, the production is used there, it is used for Germany?
Rashmi, these are two different markets. So German tender which we have won is entirely for the German territory. And US supplies are totally different. So right now we are in the range of $1 million, and marginally it will fall.
Marginally it might fall, you are saying?
Go up.
See, one is not coming at the cost of the other.
Yes.
That's not how it works.
Okay, so that means it is basically stagnant in the US, right? That is not affected.
US, generally when you make supplies, you make enough for a couple of quarters and then you get the next order. So that's how it. So if you study QOQ, you may feel like that one is going down, other is going up. But annual basis, there is nothing like that.
Yeah, it will go up finally.
Yeah.
Okay. And this supplies to Germany has already started in this month, right?
Barely this month, yes.
Okay. So basically when you're saying that 70 crores supply, it would be calendar year 21 and 22.
Yeah.
Okay. And ma'am, what about the margins from this kind of tender? Is it like very competitive, and is it below company level margins, or they are much better or equal to the company level margins, the current company level margins?
They are equivalent to company level margins, I would say. And you cannot generalize. If you are asking for this one specific product, we are vertically integrated on it with our own API.
Correct.
So that's how we can do it at decent margins. Okay.
Okay. So specifically for this Germany market supply, I'm asking whether it is in the whether it is equivalent to or it is slightly below the company level margins.
Equivalent.
Equivalent to it. Okay. Okay. Yeah. Thanks. That's it from my side, and wish you all the best.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Sajal Kapoor from Unseen Risk. Please go ahead.
Oh, hi. Thanks for taking my questions. Sandeep sir, in a recent webinar hosted by ICRA, you sounded very positive on the emerging CDMO opportunity for many Indian companies, including Indoco. So my question is, with an integrated CRO and a strong R&D setup and synthesis capabilities in complex sterile injectables and ophthalmic nanosuspensions, we have MUPS, we have pulsatile drug delivery and so on, we should be able to scale up innovator and partner synthesis quite meaningfully, no?
Yes, yes. Not necessarily innovator companies. I was talking about the large generic companies in the US who gave a lot of opportunity to Indian companies to go ahead for contract research in terms of development of complex ophthalmics, complex injectables. That's the story I spoke about.
But if you are asking about whether these capabilities can be used to work with innovators, then as such on paper it is the same.
Yeah.
And if you ask me about a decade ago or more than that, there used to be clear baskets of innovator and generic. In the last few years, this has really become a very thin line. So both kind of companies work with each other. So from a capability perspective, what you said is correct. From capabilities on clinical research, doing BE studies, product development, and even custom synthesis in API, we have all the capabilities.
Yes, ma'am. So exactly. So that's my question. When we have all the capabilities, I mean, why are we not aggressively pursuing that path? And do we have the capacity to address that sort of opportunity? Because see, what happens is we have to think 4 or 5 years out for this. So it takes a couple of years to design and build a new plant, then the validation batches, and then the qualification, etc. So all this from start to going commercialization takes 4 or 5 years. So we have to think for 2025 and beyond growth today.
Right. Yeah, it's a good perspective to bring in.
Definitely.
The two kind of lines of business are very different though. And the kinds of risks that are taken also on both businesses, if you partner with generic versus if you partner with innovator, are also entirely different. But certainly it's something for us to consider going forward.
Sure, ma'am. We look forward to some further updates in ensuing quarters on that one. And secondly, ma'am, COVID seems to have disrupted us more than our smaller size peers as far as the domestic business is concerned. So, I mean, is it because we could not leverage or effectively adapt digital and online channels as effectively as some of our smaller competitors have?
No, it is more a play of how large some of the products which got impacted were for us in particular. So if you look at the top 4 segments for us in India business, number 1 is stomatological, number 2 is anti-infective, number 3 is respiratory, and 4 is GI. And other than stoma, all 3 got impacted. So it is more a case of the product basket which got impacted having a very high proportion of sales for Indoco compared to some of the other companies. This is what I have to say, to be honest.
No, I agree with that, Aditi ma'am, but even if we take pre-COVID, so let's take the quarter ending December 2019 when there was no COVID, our field force productivity was one of the lowest, and that has been a pain point for us for quite a few years now. When can we expect our field force productivity to sort of at least improve and not be at the rock bottom as far as the peer group is concerned?
Today our field force productivity is close to 2.5, and I expect it to inch up towards 3 in the next 2 years.
Right. So we were 2.4. Today we are 2.5, and we expect to go to 3 by the end of FY23.
Yes.
Okay, sure. And finally, if I could just squeeze in a couple of product-specific questions. So, how has been the traction on dorzolamide in a world where almost everyone is kind of working remotely in a Zoom-enabled digital world? We naturally expect some traction on the ophthalmic and products like dorzolamide, etc. No?
We do not have Dorzo in India as a brand, and internationally we have just got the product back from Teva, so we are yet to launch it. If you ask how have ophthalmics taken off in India compared to much of the other segments in ophthalmology, the tear substitutes have done better, and in our case a product like Irivisc has done quite well compared to most other ophthal products. So to that extent, computer vision syndrome, as it is called, has impacted people, and there is higher consumption of products like tear substitutes, Irivisc, which is one of our brands.
Sure, ma'am. And finally, on the olanzapine, the approval came about 6 months back, I think August last year. So any traction on that, as well as some of the first to file and para 4 opportunities we spoke about previously?
We expect to launch in April, olanzapine.
Okay. And first to file and para 4, are they imminent launch this
Which
quarter,
one?
next year?
No, those are much later.
There was some first to file and para 4.
Yeah, some of the first to file will come up later for launches, not now.
Sure. And do we expect to continue with this 50 to 60 crore annual spend on the R&D side, or is it likely to increase given that we are pursuing more complex formulations? And
it will marginally increase, but we should be able to maintain as percentage of sales.
Sure, ma'am. Okay, ma'am. All the very best. Thank you.
Thank you.
Thank you. The next question is from the line of Charulata Gaidani from Dalal & Broacha. Please go ahead.
Yeah, my question pertains to how many products are there in the US today, and what is the status of repeat orders?
In the US, we have 18 approvals, out of which 10 are already there in the market. And we have 29 products pending for approval.
Right. Now, are you getting repeat orders, and what is the frequency?
Yeah, repeat orders take a quarter or so. So we have just started supplying, and it is ongoing kind of a thing. So we are getting repeat orders for the products which we have supplied a quarter or 2 quarters back.
Charulata, our forecasts for US as a top line are based on these kind of orders in hand and the picture that we are for US.
Yeah. Okay.
Yeah.
Right.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Rashmi from InCred Research. Please go ahead.
Yeah, thank you for the follow-up. Just want to understand on API business, this quarter was exceptionally strong in terms of domestic API. So have we got some exceptional supplies have we done in this quarter, or this is, I mean, how do we look at overall?
Right. So when it gets classified as domestic API, it simply means that we are not earning in foreign currency. So this is being supplied to other Indian players who are using the APIs for their exports. That is the key trigger. Yeah?
But what I want to understand that this quarter, the supplies were very high. So how do we look at it? Is this the new normal, or it is just one time?
No, it is not one time. API will continue to do well. Like I have said earlier, we primarily, the first customer for API division is the international formulations of the company. So in a particular quarter, they can get impacted for top line sales from external depending on how much capacity they have to sort of reserve for internal use. That's all. So in this quarter, possibly they could sell more outside. This is what is happening.
Okay. Okay. Thank you. That's it from my side.
Thank you. The next question is from the line of Rahul Sharma from Karvi Capital. Please go ahead.
Yes, sir. Just forgot. What is our debt currently, gross debt?
Total debt is, as I said, 285 crores, of which working capital debt is 139 crores.
Okay. And how much what is the target for the year end, sir? And for FY22?
Long-term debt will be retiring quite a lot in this year. I think from 145 crores, it should come down to 125 crores by year end.
Yes, the target is to every quarter sequentially reduce it. You might have observed in last 6-7 quarters, there has been a reduction of about 25 to 30 crore. Of course, the short term, this trend will continue. This increase which has happened compared to the earlier quarter, it's about 20 crore plus. So maybe 5 crore here and there it will happen, but
depending on the business need.
Okay, so FY22 long-term debt further will go down to 100 crores. Am I right?
115 crore kind of thing. 15 to 20 crore it should happen.
Okay, thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Vishal Manchanda from Nirmal Bang. Please go ahead.
Hi, good afternoon. I just wanted to understand what is the status of the approved ophthalmic ANDAs that Teva was supposed to transfer back to Indoco. So when should we expect the launch of these ophthalmic ANDAs?
So 2 products have been handed over and are back with us. These are currently under revalidation and preparedness for launch. And there are at least 4 other at various stages of discussion and handing over.
How many others? 3 others?
4.
4 others. Okay. So these are approved ANDAs, the 4 others which are pending?
No. They are not approved. I think 2 are approved and 2 are pending.
Okay. So how long would you take to launch these 2 ANDAs?
First quarter of next year.
Yeah, first quarter of next year we can expect
the launch.
Okay. And so you would seek a new partner to launch these ANDAs?
Yes.
Right. And any complex approvals that you would expect in FY22?
Yeah, there are a couple. We will guide you because we are expecting some kind of audit to happen for that to get cleared. So once FDA comes down on audits, we'll be in a better position to commit.
Is there a routine inspection also due for any of your facility, Unit 1, Unit 2?
Not really. We have invited US FDA to come down for Plant 1 so that the warning letter can be cleared.
Okay.
Other than that, it is mostly for product approval.
So are these oral solid launches like olanzapine, febuxostat, are these not happening because there's a warning letter on the...
No. They are from the other plant and they have nothing to do with either warning letter or even prior approvals. They are simple products and olanzapine is going to happen in April. Yeah. Febuxostat has also already been launched.
It's already launched. Okay.
Yeah.
Thanks. That's all from my side.
Thank you. The next question is from the line of Sudarshan from Sundaram Mutual Fund. Please go ahead.
Ma'am, just to take your earlier commentary on the cash flows and debt. I mean, just if I just do some calculation, I mean, for the 9 months itself, we have generated a cash profit of about 120 crores. That is PAT plus depreciation. And overall, we have seen like around 100 crores increase in sales. That's primarily the first 9 months of FY20 versus first 9 months of this year. And if I actually go by historical working capital of even 90-100 days, I would assume that typically we would only require about 30 to 40 crores at best in terms of working capital for this jump. So why is the debt reduction so small? I would assume that the debt reduction should be at least to the tune of about 80 to 100 crores this year. Should have been.
Yeah, with the ramp up in international business, the working capital cycle there is higher than in India. That is one reason. And also we are reinvesting in some very high-end manufacturing of potent products in R&D. So reduction in debt is not the sole criteria.
Yeah. So, I mean, are we talking about capex or opex? I mean, in terms of R&D cost.
Both. Plus our regular capex program is there around 50 to 55 crores per annum.
Okay.
Yeah.
Sure. And what would be the working capital intensity when we look at the US incrementally?
In terms of number of days?
Yes, sir.
US payment cycle happens once in a quarter. So anything which is supplied, let's say on 1st April, 10th April, 15th April, you get the payment only on 1st, 2nd to 5th July.
So you can take 15 days increase in working capital cycle as far as US is concerned.
Okay. Sure. Thanks a lot. That's it from my side.
Thank you. The next question is from the line of Sajal Kapoor from Unseen Risk. Please go ahead.
Yeah, hi. Thanks for the follow-up. My quick question for you. So historically, we have been very efficient in converting our EBITDA to operating cash flows. My expectation is based on the 9 months result, we should be reporting an operating profit of somewhere in the region of 230 to 40 crores for the year ending March. So taking our historic cash conversion, EBITDA to cash that is, we should be able to report an operating cash flow, net operating cash flow that is, of somewhere in the region of at least 160 crores. Is that a fair ballpark or?
We lost you in the last part of your question. Sorry.
So, no, Sandeep sir, I was saying that we should expect to close the year March ending, that is, this fiscal, somewhere in the region of 230 to 40 crore operating profit. Now, looking at our historic EBITDA to cash conversion ratio, we should be able to report net operating cash flows of somewhere in the region of 160 crores this fiscal. Is that a reasonable estimate, or am I off?
Yes.
Am I?
Yeah. Your judgment is right.
Okay, which means that this should be our best ever year in terms of the net operating cash flow.
Yeah.
Because we have never generated 160. We have not even generated 150 historically.
Compared to last 3 years, yes.
Yeah, correct.
The best year after 15, 16.
No, not even last year. I think even before the US FDA disruption, we never generated 150 if my memory serves me right.
Yeah. Just let me explain.
Our best year was 2019, which was after the US FDA disruption, and we generated 132 crores then.
No, you have to go back to 2016, 17. We used to have a PAT of over 80 crores.
No, not PAT, Aditi ma'am. I'm talking about
operating.
Yeah.
Okay.
Yeah.
Right. At operating level cost.
See, what has happened is. Yeah, I got your point. Our commitment in terms of our infrastructure coincided with all the problems. We acquired a plant in Baddi. We expanded Patalganga. We expanded our sterile plant, and this took away a huge amount of internal accruals. And plus, we invested out of our long-term borrowings. To get back on our feet, it has taken 3 years. That's what we are trying to tell you. And this year would be the best year in the last 3 years.
Yeah. Correct. No, I've been following Indoco for many years, Sandeep. So I know the disruption, the Goa too, and all the rest of it. So 160 odd crore of operating cash flows. Our regular maintenance capex cannot be more than what, 40-50 crores max.
Yes.
So we should be reporting very healthy amount of free cash this year and going forward, right?
Yes, yes,
We can
definitely.
use that for growth capex and
You got it right. Yes, absolutely.
Okay, that's good to know, Sandeep sir. Thank you so much. All the very best.
Yeah, thank you.
Thank you. The next question is from the line of Mitesh Shah from ICICI Direct. Please go ahead.
Thanks for taking my question. Just a quick housekeeping question. What would be the tax rate for FY21 and the 22-23? And how much the deferred tax we have in the book?
Our tax rate is expected to be in the range of 30 to 34%. That is the range. And you're talking about deferred or the MAT credit available? Yeah, MAT credit available is close to about 50-55 crore.
So that 30-34 is for 22-23 as well? We are opting for the new tax regime.
New tax regime probably will take third year it will be new tax regime. So you're right. For another 2 years we will be still under old regime.
Okay, that's it from my end. Thanks a lot.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Vishal Manchanda for closing comments.
Thanks everyone for taking time out to attend the call. Look forward to see you all over the next quarter of the earnings call. Thank you very much.
Thank you everybody for your active participation. Thanks a lot.
Thank you. On behalf of Nirmal Bang Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.